What if I told you the stock market hitting record highs is not actually good news for most people? While politicians celebrate green charts and billionaires get richer overnight, millions of ordinary people are still struggling to pay rent, buy groceries, and escape debt. And right now, Donald Trump is proudly pointing at the stock market as proof that the economy is booming. But here's the problem. A booming stock market does not mean average people are winning. In many cases, it means the wealthy are simply pulling further ahead while everyone else falls behind. Most people never realize this, but the richest Americans own the overwhelming majority of stocks. So when the market explodes higher, most of the gains go to people who were already wealthy in the first place. Meanwhile, ordinary workers are left dealing with inflation, rising living costs, and stagnant wages. That's why so many people feel confused today. The news says the economy is strong, but their personal finances feel weak. They hear about all-time highs while their own bank account barely moves, because the system rewards ownership far more than labor. That is the real difference between wealthy people and everyone else. The wealthy own assets that compound. Stocks, businesses, and real estate continue growing while they sleep. Most people, on the other hand, spend their entire lives trading time for money, and that's exactly why politicians obsess over the stock market. The market represents ownership, it represents capital, and capital is where real wealth is built. Now here's the twist. Staying angry at the system without learning how it works changes nothing. The smartest thing you can do is stop watching from the sidelines and start becoming an owner yourself. Because despite all the flaws in the system, the stock market is still one of the greatest wealth-building tools ever created for people who stay patient long enough. But this does not mean buying random hype stocks or gambling on trends. Intelligent investors focus on high-quality companies with real profits, strong balance sheets, and businesses that can survive for decades. And if you want help finding those kinds of stocks, there's a free simple stock screener linked in the description that helps you filter for high-quality companies in seconds. Most people invest emotionally. They buy when prices are already high because excitement feels safe, then panic and sell during crashes because fear feels dangerous. But experienced investors understand that long-term wealth is built through consistency, patience, and compounding. That's the secret nobody talks about. The market becomes powerful not over 1 year, but over decades. And honestly, whether Trump celebrates the market or not changes very little for your future. What matters is whether you are building ownership yourself, whether your money is working for you instead of sitting still, because eventually you realize something important. The market was never designed to reward spectators, it rewards owners. If you enjoyed this video, subscribe and like the channel for more videos about investing, money, and financial psychology. And don't forget to check out the free stock screener in the description to start finding stronger long-term investments faster. Let me know in the comments, do you think the stock market reflects the real economy anymore? And I'll see you in the next video.